Hello, today is October 7th, 2017. My last call said that Thursday's pattern was negative unless we capped over its high. And I said if we capped over its high by a small amount to look for a gap and trap. Well, we didn't get the gap and we did stay negative all day long. Friday's pattern has positive and negative elements to it. Because of that, the most likely outcome on Monday is we have a gap opening and promptly trade outside the day's range. I think the odds favor the gap being under these lows. Let's go over all the reasons. We had this unrelenting advance, gapped down, so far have only managed the Fibonacci retracement of the decline, which is a normal occurrence. Despite rallying all day long, we couldn't get over the early highs. That's negative unless we gap up over them. We have a wall into the close right at a MEJT resistance level, and we also have a lower MEJT target. Unless we gap up smartly, my call for Monday is 25.44.99. When you gap down, hit lower lows, and can't close under them, it's positive unless you gap down and promptly trade under these lows. And again, this other stuff is negative unless we gap up and promptly trade over these highs. October the 8th has been my call for a change in trend. It's a date to watch. As I say, the system I'm working on has some amazing hits and some complete misses. October 8th is Sunday. There's no market on Sunday, obviously. So either Friday the 6th or Monday the 9th is the date. There is a tolerance, and this is close enough to October the 6th to make it work for the date. As I've said, I can make any number of prices work, but the general, I make a number of prices work for A and then to this gray wave B, but the general principle is this advance here, impressive as it is overlapping and not impulsive, so we're going to have a gray wave C at some point, which is probably going to bear some kind of relationship in size to gray wave A. Now this isn't the only price at which I can make a case for this ending, and I've been fooled before. But let's take a look at some of the long-term Fibonacci relationships. This is a monthly chart. Highs and lows tend to be Fibonacci targets of prior consolidations. You can look at this consolidation here, 38.2. You can forget the actual low, take this low, this high. There's your 38.2. You can take this wave 2 of the current 1, 2, 3 AB advance. You can see we are a perfect 14.6 and 23.6 target of that consolidation. You can see we're a target of this consolidation. Also, you take that low, and either this high or this high. It's the same principle. So a lot of Fibonacci numbers target this price, but as I say, I can make other prices work too. If we gap down, and I'm right, if we gap down under this low, there's a potential this high is going to hold, and we're going to have gray wave C. But the only thing I'll predict now is we gap outside the range. Here's my target. But if we start dropping with conviction, this has the potential to be a high which stays around a while. And that's today's call.